State Street is one of the world's largest asset management companies. It has overseen many changes in the business world and financial markets, and is at the forefront of our changing world today as the world pushes towards net zero and implementation of AI.
For us, AI, when it comes to productivity, to a large degree, is machine learning.
Joerg Ambrosius is President of Investment Services at State Street. Thank you very much for being with us here today. You have said that the capital markets were more resilient than people expected. What do you think the key factors were weathering the storm?
Yeah, Anna, it's actually a very good question. It's a very fair observation. We indeed have seen a much more resilient industry in the financial markets than what people were expecting when COVID was unfolding. And we believe that a strong reason for that was the aftermath of the financial crisis, where a lot of systematic strengthening was brought into the financial sector. We also realized that the technology that is in use allowed firms to operate remotely and at scale. That was not necessarily expected before we kind of got ourselves into that crisis. And we are very confident that the system has proven that it can weather crisis well.
So in a way, this was a test, difficult test, but a test that showed the resilience of the markets.
It was a real test and was a test that unfolded very fast. We on our side were fortunate that we had exposure in China where the crisis emerged first, and that allowed us to plan with some lead time for a global impact. And we actually managed to go through this without any real impact on our business.
Which is saying you were prepared for the pandemic long before some of the people who weren't exactly involved with China.
We actually did because of our truly global footprint, yes.
Information is everything. Tell us about supply chains.
Well, the supply chains actually are being seen now in a different light. Before it was all about efficiency. Now it's much more about resiliency. And resilience...
Since when?
Well, that is actually something that unfolded also after the COVID crisis. So a lot of organizations have realized that they need to put much more emphasis on resiliency, and they are now reviewing their global footprint and how do they operate their business in a way that they could continue to operate if there was a serious impact in one part of the world without impacting the global business at large.
Tell us about AI. What do you see are the true forms of impact the AI has on the financial sector?
So there's obviously a lot of hype around AI right now.
But what do you actually feel?
So we would argue we are applying AI for a long, long time in our business. And when you talk about AI, you have to really be more crisp on what is it really that you mean. And AI has various dimensions. For us, AI, when it comes to productivity, to a large degree, is machine learning. And we've applied machine learning in our operations for a long, long time, and that has absolutely increased the efficiency.
Can you be more specific when you say machine learning?
So, for example, in our business, in operations, there's a lot of reconciliations happening. And traditionally, that is one individual trying to reconcile two positions between counterparties. This is done by a machine today. And the machine actually learns. The machine is in a position to recognize that there is certain patterns, and then the machine actually delivers on an exceptional basis the information for the human being to still intervene, but on an exceptional basis. So the efficiency that was being generated here is actually enormous. The next generation now is the generative AI. That is a field where we believe will have very, very substantial opportunities in the future, but we have to be careful in how we apply generative AI.
So this is where the danger is as well.
Well, that is an area where at least you need to be very selective and where you have to really understand what is the underlying data that you want to leverage for applying these engines to.
You mentioned there is a hype, and you use the right term indeed.
Yeah.
How would you compare this hype to the internet hype that happened not so long ago?
Well, there's a little bit of that. We see valuations right now applied to firms that are active in the AI space, where you could question, is that really still a realistic value?
Is that sustainable, the evaluation of companies?
I question that some of these valuations are sustainable, but that is what happens in a hype. And now we have to see on what firms and what models actually deliver against the promises and the expectations that have been risen. Long term, there's no doubt that AI is a game changer in the financial industry and across multiple industries. So we are very positive about the long-term impact that AI will have. When you look at the short-term valuations, you could really question, is all of that in line with the real economy?
Where do you then see opportunities today? Do you still see it in AI, or are you looking at other areas as well?
We have defined what we call the 5Ds as megatrends that eventually are impacting the investment services industry. One is de-globalization. The second one is decarbonization. The third one is debt. The fourth one is digitization. And the fifth one is demography. So all of these, from our perspective, will drive substantial opportunities. Some of them represent risks, but these risks need financial engineering to really help the society to overcome these risks. So we believe that these are all substantial opportunities that will develop in the years to come.
Thank you very much.
Thank you.